We're back for session 2 with Alice and Rife Martin around setting up your own financial company or finance company. And today we're talking about the tax and legal setup. We're not going to get a lot into the legal, but we're going to get a lot into the tax and a little bit into the structure. But let's get into it. This episode is brought to you by Rife Martin CPA, where you can catch Allison in her office or at the local comedy club telling tax jokes and having a good time.
Oh my gosh. Okay, pressure's on to come up with one, but I can't come up with one right now. Although I am working on my newest book that'll be coming out this year, and it's called Where the Tax Stress Ends,
I like it.
on the play of Where the Sidewalk Ends. So it'll
Ah,
be puns, poems, and other tax ideas.
I got a question for you. What did the
Yes.
beaver say to the CPA?
I don't know. I have no idea.
I don't either. I was just trying to be funny, but we'll let that one.
Oh my God, I was going to see trademark your logo before,
Yeah, right.
my God.
A little inside joke here for
I was going to
Texas
say,
business.
us Ohioans would appreciate, trademark your logo.
Oh, look, Steve gave me a good one, a good joke. I bought a wig for $1 today. It was a small price to pay.
Uh, oh, that is a good one.
That's a
I
good.
love, actually, thank you for that one, Steve.
It's my daily dad joke.
Yes, exactly. Oh my God.
Oh
Okay.
man, that's
I'm
funny.
going to remember that one. Okay.
All right, where are we? Tax and
We're
legal setup.
talking about when you open up these type of entities, what's the legality and tax piece behind it too? Like what things do you need to take into consideration? And obviously the first and foremost is you should make sure that there is a real business motive behind doing it. It's not because you're trying to shelter income. You're not trying to, you know what I mean? Make sure that you have a real legitimate reason rather than just going through something that's already put into existence, like a bank, for example. Because I could see somebody saying, "Why would I do this when go through all this extra compliance when I could just go to the bank?"
So, how do you did we talk about how to structure the finance company properly? Because as I understand
Yeah.
it, you don't want to just like take your personal assets and then loan it to your business without.
Yeah. I mean, you've got the business plan set up. You've got the proper motivation behind it. You've worked with an attorney to properly set up the entity and all. Um, you could do it as an LLC. You can do it. Obviously, the goal is asset protection, but again, separate arm of the business. Because again, the other thing too to consider is you don't want to necessarily intermingle the finance, or say you don't necessarily just you don't want to intermingle finance and then the other purpose of your actual business. Again, first off, it becomes an accounting nightmare to keep track of, but two, that would help destroy the idea that really are these separate businesses. Do you have a proper business motive for what you're doing?
Got it. So you got to separate out the businesses.
Right, right.
Okay.
So you set it up. I mean, and again, I imagine that an attorney would say, you know, if you're going to do the LLC, make sure that you've got a proper agreement, or operating agreement. So we'll just assume that all the boxes are checked as to the things you do to cover yourself, business wise and asset protection wise.
Got it. And how does the tax collector look at the interest income from a finance company versus like standard sales and revenue from the main business?
I mean, it's all income to them. But there's no, if you're meaning like, is there any differentiation in tax? And they're both taxed at ordinary income.
Hmm.
With the your main business, obviously, you've got business expenses to offset the revenue. The interest income on the finance company side, you would obviously have expenses there as well too to maintain the business, whatever kind of accounting expenses, tax expenses you can set up. Those may help offset, but presumably there's going to be different ways you just have to report it differently, but in the end, it all gets taxed the same.
And you'll also have the expense of you'll have the expense of the interest you pay the bank when you borrow against your assets, right? That'll be like in the expense column.
Right. Yeah, that's an expense as well too. Yep, you are correct there too. So, yep. So that's but in the end, it's all taxed and accounted for the same. It's just a different category of income.
Got it. What's the single biggest accounting mistake business owners make when they start moving money back and forth between their main company and their finance arm?
I would say if you don't have a good accounting system and or accountant keeping track of it, and we sit there and laugh about it, but it is kind of hard. You have to be able to trace it and make sure that. And again, I'm sitting here thinking too. We hadn't talked about deferring income. If you want to, if I want to not recognize the income in company one, and the company two gets it, you have to just make sure it all matches in terms of recognition, accounting, revenue recognition, revenue and expense recognition. So that's a big expense or big mistake, but also to categorizing it appropriately.
So it sounds
and supporting documentation.
So it sounds like you're gonna need a really good CPA firm to run this, but it looks like if it's done right, your cost savings are gonna pay for your team multiple times over.
Exactly, and then also too, I think it would help you be able to better manage your cash as well.
Help. This is good because one of the things, Allison, that I have like a lot of ambitious clients that are good at making money in business. And like I read Rich Dad Poor Dad, right? One of my favorite, and I read it in college, right? And it impressed upon me like the quadrant. You had the employee, you had the self-employed, you had the investor, and you had the business owner. And it was like, if you want to get rich and have a lot of time, right? You got to move to the BI side of the table. And so I was like, well, what's the difference? Everybody go, what's the difference between a self-employed person and a business owner, right? Well, the short answer is the business owner has systems and teams that like work for them. You know, like a business, if you have a business and you're structuring things right and you got a CPA running things, you know, then you're just like directing resources and coordinating your team, and you're not like, you know, you're getting paid for your nervous system and your intellect, right?
Right.
You know,
exactly.
Versus your sweat.
Exactly. That's true. And that's a better way. You're right. I hadn't thought about that. But that is business owners would be sitting here thinking, how can I legitimately take advantage of, you know, tax savings and also to making money all at the same time? This is a good way to consider it. But again, remember, there's a lot of administrative burden that you have to consider too. Is it worth it and something you want to keep up?
Absolutely. And this is why I keep coming. I'm going to drop it one more time and we'll end it. This is why I keep coming back to my people. Got to have a team.
Yes, exactly.
Got to have a team. Look, because I'm like I feel like I have a great financial team and you, and then my CFO team, and I'm a finance guy, but I'm like, listen, y'all, if you don't do this with a team, it's abundantly stressful.
Exactly. So anyway, well, this was a great episode. Thank you very much for this.
Thank you for sharing. Let everybody know how they can reach you if they want to, you know, look into building a better team.
Into you can go to my website, rifemartincpa.com, or you can email me at info@rifemartinaccounting.com, and this would be a fun topic to talk about. And maybe we can hit Steve up for some more dad jokes too.
Yes. He'll have another one coming for next episode.
Excellent.
Thanks. Have a good one.
Have a great day.
You too.
Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.